Good evening, everyone, and welcome to Navigating Your Financial Future series, second session we've had. And tonight we're going to talk about the impact of last week's election. It's a real honor and privilege to serve as your moderator tonight. We've got some wonderful content for you, so I will do a very brief introduction of our three panelists, starting with Jerry. So Jerry Seib, many of you will recognize, he is the Washington editor for the Wall Street Journal, and is a real frequent appear on your favorite channels from CNBC to Fox to CNN and BBC. And I'm a huge fan of his weekly column, The Capital Journal, which if you haven't read, you should read. It's absolutely fantastic. And in a world of lots of subjective views, I find Jerry refreshingly objective. And so really a pleasure to speak to him tonight. So welcome, Jerry.
Thank you.
Jerry is a Notre Dame parent. Undoubtedly, his favorite child is Joe, who graduated from Notre Dame in 2010. Katie Koch, a Notre Dame grad, is co-head of the fundamental equity business at Goldman Sachs. And people say that Notre Dame team was tough last Saturday night, but Katie is also proud mother of a 2-year-old, a 4-year-old, and 6-year-old, and is a week away or less, let's see how tonight goes, from giving birth to baby number 4. So really thank you, particularly to Katie, for joining us tonight.
It's good, great to be here.
And then Jessica, who was with us in June, for those that joined that conversation, she's a director in the Office of Gift Planning, working for the university, and great to have Jessica back with us again tonight. So let's dive right in. Jerry, sure there are many thoughts crossing your mind, but what's the biggest surprise for you from last Tuesday?
Well, it's all a jumble in a way, but you know, at one level, I'm inclined to say everything that's happened in 2020 is a surprise, because I mean, who's ever been through a year like this? But on a more immediate level, nothing is actually a surprise. I mean, we kind of knew what was going to happen, and we knew we were having an election in the midst of a coronavirus. We knew that there would be a lot more Democrats voting early because they were encouraged to do so, a lot fewer Republicans voting early and by mail because they were encouraged not to. We knew that would stagger the way the vote was counted and produce a lot of confusion on election night. And we knew that in the end, the Democrats would come back stronger as the count went on. And we knew President Trump was going to dispute that, all of that, because he'd been saying for months there was going to be a rigged election. And that's what we've seen. So, and by the way, we knew President Trump had a tough uphill road, because he was trying to do something literally nobody has ever attempted to try to do before: run for re-election as president of the United States without ever having hit 50% job approval in the Gallup poll. I mean, nobody's ever tried that before. So this was always going to be a difficult slog. I guess the biggest surprise was probably how close the early vote counts were. But I think it's also a kind of a surprise and a pleasant one for Democrats that Joe Biden seems to have kind of rebuilt that blue wall in the upper Midwest, Pennsylvania, Wisconsin, and Michigan. Didn't quite get Ohio. I kind of think Joe Biden was the only person who could have done that. But his success in running the table up there, at least as the way things stand now, is probably a surprise. And I guess the other surprise was that President Trump actually made a couple of inroads. And this is an interesting, important long-term thing. He made some inroads with Black men, some inroads with Hispanics. The final surprise, I would say, is how well Republicans did everywhere else except at the top line, except in the presidential race. And this is not getting enough attention, John. I think it's important. They're probably going to hold on to the Senate. They actually gained seats in the House and came surprisingly close to taking over the House, which nobody saw coming. And they gained in state legislatures. They didn't lose a single state legislative chamber. And that's very unusual when the guy at the top of the ticket for your party, the president, is not winning. You're supposed to lose down the ticket as well. That didn't happen, and that's an interesting twist that I don't think many people saw coming.
And if you're sitting tonight with the Republican Party, how do they feel about Tuesday night and where we stand today and what it all means for them as they move forward?
Well, it's pretty easy if you get past the Twitter talking points and yelling points. It's pretty easy to summarize that. Republicans, they don't think President Trump's going to somehow magically turn around the election. I mean, that's just, look, he is behind in all 6 of the contested states: Michigan, Pennsylvania, Wisconsin, Nevada, Arizona, and Georgia. He's losing those 6 states by a combined 275,000 votes. There's absolutely no precedent in history for somebody going to court or having a recount and turning around anything like those kinds of numbers. He would have to turn around 3 of those 6 states, not 1 or 2, but 3. So they know that President Trump is not going to be president. But what they really care about is what happens in Georgia in the 2 special elections that are going to be held down there for the 2 Senate seats that will determine who's in control of the Senate. That is the biggest game in Washington. It's at least as important as who's in the White House. And that's where all their attention is focused. So if you ask Republicans, they'd say, we're thrilled with the way the night went overall. We basically want to take every artillery gun we have and take it out of Georgia and try to hang on to the Senate, because that will determine the way this town operates for the next 2 years.
And what about the Democrats? Also thrilled, or maybe a little less than thrilled?
Well, the Democrats are thrilled because they just desperately wanted to beat Donald Trump. I mean, let's be honest. It was an all-consuming passion for them. But I think as they think about the power alignment that's emerging, they're less thrilled. The fact that they lost ground in the House is going to make it a difficult place to operate. The difference between being up by 1 seat in the Senate and down by 1 seat in the Senate is huge. And they're now staring the prospect of not taking back the Senate in the face, which will drastically reduce the running room that Joe Biden and the progressive wing of the Democratic Party have. It will narrow significantly the space on the policymaking field. It'll narrow it a lot. And that's going to bother a lot of Democrats. They also know there's an internal fight coming between the progressive wing and the centrists, which is really the Joe Biden part of the party. I think the hidden advantage for Joe Biden in this alignment is that Republicans maintaining control of the Senate is actually a convenient thing for him. He can use the Republican bare majority in the Senate to keep the progressive wing of his own party under control. He doesn't have to be the one who says no to AOC and a 70% top tax rate. He can say, look, Mitch McConnell and the Republicans would never let that happen, so it's not my fault. We can't do that. I actually think that's a good place for Joe Biden to be. It's an alignment that pushes both parties toward the center of the spectrum. And it's an alignment that empowers moderates in the Senate. The Joe Manchins and Susan Collins of the world. They have a lot more leverage in a narrowly divided Senate, in a narrowly divided power structure. And if they're smart, they'll take advantage of it. And that's not all bad for Joe Biden. It's actually in an environment in which he could get some things done, but not have to be the guy who rides herd on the progressive wing of his own party.
Relatedly, your column just 2 days ago in the Journal was about restoring confidence in America's democracy. And I think it's just a profound statement about where America is here in 2020. I feel as though your optimism is perhaps outweighing your experience, but is this next 4 years an opportunity for unity and perhaps restoring, renewing faith in America? And can Biden somehow, we talked about the inside straight when Trump won, can he pull off the inside straight of working with whatever moderates are left on the right and the left, and a bit of an offset to the progressives in order to pull America together? Is that a scenario you believe in?
Well, I mean, I'm probably being over optimistic, but we get one chance every 4 years to be optimistic, and it's right after the election. So I'm choosing to take advantage of the opportunity. And I had an interesting text exchange with a friend who was saying it's a disaster for Biden. This is going to be an impossible environment to work in, and that might be right. I guess my glass half full view of this is that I think one of the things that's out there in the country that works to Joe Biden's benefit is this huge desire for a return to normalcy, to just have everything calm down, and maybe not to have to spend every waking hour of every day thinking about the president of the United States, and a pent-up desire for a kind of a return to decency. And that's all tailor-made for Joe Biden. I mean, he's a flawed figure in many ways, I suppose. But that is what he is. I mean, he is a unifier and a decent person. And there's a lot of hunger out there for unity and decency. And so I think maybe it's a moment made for Joe Biden, and maybe that overcomes some of his other problems and his own shortcomings personally. And I would just say that one of the things that a president can do to improve his own strategic position is to simply be popular. I think back to Ronald Reagan, and that's when I sort of entered this picture when I got to this town. Ronald Reagan exerted a lot of power over the system where, by the way, Democrats were still in charge of the House when he started, simply because his own personal popularity required that Democrats respect him and work with him because there was a kind of a mandate in public opinion. Maybe the country is too divided, maybe it's too polarized, maybe it's too jaundiced for that to be the case now, but just maybe people will be happy to have somebody who brings a different tone, and maybe he can leverage that himself into a kind of a bit more power than the numbers on the chart of Democrats versus Republicans in Congress would tell you.
Just to press you on this before we turn to Katie for a Wall Street reaction, but you talked to undoubtedly leaders on both the right and the left. Do you think enough politicians look at your article on Tuesday and say, gosh, he's right, and as much as we enjoy the political muck and the fighting and throwing mud at each other, we do need to get our act together and restore America, and there'll be a well-intentioned effort to do so, or is it still so much broken glass?
Well, I think so. I think there's something a little scary about this moment for everybody in the country, and particularly if you're a practitioner of the political arts. I think there's something scary about having elections in which you're not sure whether people will actually believe that the outcome is legitimate. And if you are about to run again in 2 years, that's not a happy picture for you. And so I think what I tried to say in the piece is that I think there is a need for people to kind of restore Americans' sense of confidence in the system, and specifically to restore Americans' confidence that the way we actually elect people and send them to Washington is legitimate, it's honest, and they can believe in the outcome. And that's actually in the interests of everybody. And so, I think we got to get out of the hothouse, and we're not quite there yet. But I think when we do, I believe there are probably people in both parties who recognize that this is a dangerous moment, and if the sense that people have that there's something funny going on and you can't trust anything in the system, it's not good for either party, and it's particularly not good for the country because it is exactly what Vladimir Putin and Xi Jinping in China and the mullahs in Iran want to happen. They want this to be a democracy that is not a model for the world. And we're giving them exactly what they want on a silver platter right now. And I think there's plenty of people in both parties who don't think that's a good look.
Thank you. Katie Koch, Monday was a big day for the markets, up 1,000 points. Happy days are here again. We have a vaccine with Pfizer, and seems like they were pleased with the outcome of the election. But what do you think? Is Wall Street, let's use Jerry's word, thrilled? What do they think of the election results?
Yeah, so I personally, I think the move on Monday, which was obviously quite dramatic, is probably more about the vaccine than the election. I think the people anticipated that was going to be the outcome of the presidential, having that solidified on Saturday, obviously helpful, but waking up to the news from Pfizer on Monday, I think is really what lit markets up. I do just want to say, because we're all human beings on this call and people of faith. So just to reflect for a moment, I'll talk a lot about markets, but obviously this is an incredible development for humanity if we do have this vaccine. Obviously, saves lives. It's going to make people healthy. And I also just want to comment or reflect geopolitically, and we can come back to China, but we're clearly not doing a great job of controlling the virus. In the pre-conference, we were just all talking about how the numbers continue to go up, and perhaps President-elect Biden will be able to do a better job on that. We should all hope for that, obviously. But we have done a much worse job than China on controlling the virus. But where we should be very proud, I think, as Americans, is how quickly these pharmaceutical companies are coming up with vaccines that work and that hopefully will be able to scale. And I think it speaks a lot to the ingenuity and the edge of innovation that we continue to have in the US. And it actually is a reason to be bullish about Americans, in addition to 100 and how many people came, Jerry, to the polls? How many people voted? 150?
150 million. It's a remarkable number.
And that is. And so we always have to I'm an equity person, so I'm looking for reasons to be optimist, but that engagement in democracy and how innovative we are in bringing this vaccine forward, I think are things worth reflecting on. On the markets itself, I would say, again, it reacted to that news. People believe that there's going to be economic normalization if there is a virus. And so we got that big lift in markets. The year-to-date numbers, we now have equity markets up 9%. That's not something a lot of people would have thought would happen on the year back in March. We can, go into some follow-up questions on this, but people should recognize under that there's a lot of different stuff happening. So we did have a rally in some of the cyclical parts of the market and a sell-off in tech. That was because people believed the economy could get stronger. But on a year-to-date basis, we're still looking at the FANG stocks up almost 50%. The other 495 stocks up only a couple of percent. We have growth up 30%, value down 10. I mean, it moves around a lot, but somewhere in that area. Energy still down 38%, although obviously a big rally on Monday, and tech as a sector overall up 30. So yes, the market's up 9% year to date, but a lot happening under it. And Monday and Tuesday started to narrow some of that gap, although it's skipping it back the last 2 days between growth and value. So people should just recognize a lot happening below the headline numbers.
And as you referenced, the FANG stocks of Facebook, Amazon, Netflix, Google, and a couple of others, there was a lot of focus that if Biden won, those stocks would be under a lot of pressure, but that story seemed to move away. But talk to us a little bit on the basis that a vaccine is coming, and although we might have a tough couple of weeks and months ahead of us, there is light at the end of the tunnel. Is now the time, or is the time coming to abandon, let's call it the work from home stocks, so the Zooms, the Netflix, Peloton, and get back into things that are clearly going to be beneficiary when we get back to normal? So hotels, airlines, restaurants. So when should people start thinking about that rotation?
Yeah, so I would say actually quite big picture, maybe we'll look back and just say, hey, this was an interesting couple of days in the market. I'm actually a believer that we may be at a very important inflection point here economically and for markets, and we'll come and talk more about it. But by that, I mean, we are going to, in my view, lose some of the hegemony of those FANG stocks that you talked about. And it's going to be really important for investors to get exposure beyond them. I also think that we are at a tipping point for inflation, and some things happened in the market this week that bolster my belief in that, and we'll come back to that. As it relates to your question on work from home versus recovery, I mean, we've had to navigate this all year. We actually run very balanced portfolios, so we had exposure to both. I don't think you can broad stroke either bucket. On the work from home front, I think there are we've had pull forward, right? Because we all had to go live our life online. Some of them have moved too far. And I think on some of them, you have a sustainable growth story. So really briefly, one that I would say has moved too far is the one that we're all on right now. So Zoom down 15% Monday, tough day, up 500% on the year. And maybe I just feel a little jealous that it has a market cap that's twice Goldman Sachs. It just seems remarkable to me. But that's a stock where I think that competition's coming. The barriers to entry are low. They have 80% market share. How much more market share can we give Zoom individually? Probably not a lot, right? And then when we have this vaccine, do I think we're going back to the old way of working? No, it's going to be a hybrid, but I personally hope I will be spending less hours on Zoom. So that's something I would say is run too far. On the other side, another work from home stock that's been very, up over 100% in this environment and also gets used as a verb is DocuSign. But that's something that I think, it is profitable. There is high free cash flow. I think we're going to be doing a lot more DocuSigning in the future. And they have a real path to growth internationally and also without making it too complicated, more end-to-end processing where you sign documents and actually have a payment go through at the end of it. So that's a story where I think there's more room to run. Where I think investors can find in aggregate more value and we expect more upside would be in more of the recovery buckets. So we like travel. Just one quick comment. China is a great place to look on a FIFO basis, first in, first out, because as I already commented, they've controlled the virus better. Their consumer spending really has normalized. Domestic travel is almost back to where it was a year ago. We saw that with the Golden Week data. So I think you will eventually see recovery of domestic airlines selectively. You will see recovery of domestic hotels. That's probably where we're really focused. And then you're going to see there's been a resurgence, just to stick on domestic for a second, of rediscovering America and the great outdoors. So we've been able to, and I think there's still more upside in camping related stocks, RVs, boating. Just a fun fact there, 40% of new boats and old boats sold this year were sold to first-time boaters. The average age of boaters has dropped from 55 to 35. So if anyone on this call is looking to sell a boat, this is a good time to do that. And then, concerts, live concerts as a recovery. If you look at Live Nation, which is the biggest concert provider, they gave everybody the opportunity to either get their money back or, postpone until the concert comes on. 89% of people are waiting around for those concerts to come. So that suggests to me that we are going to get continued normalization of consumer behavior. And on balance, be selective in the work from home. There's a few that still have more room to run, but there's probably more upside in the recovery bucket.
Great. Let's turn now to fiscal policy. But as we do, Jerry, I think we're all looking for signs of which way Biden is leading, moderate or progressive. One tea leaf we're all trying to read is the transition team and his new chief of staff. So what can we read into some of these early moves, if anything, in terms of which way Biden's going to head?
Well, look, I mean, Ron Klain, start with the chief of staff. Ron Klain's been with Joe Biden for a long, long time. He's pretty much straight out of the mainstream of the Democratic Party. So I think that's a signal. There was some commentary about the transition teams that were appointed a couple of days ago and that they seem to lean progressive heavy, which might be true. My own view of that is a little jaundiced, I guess. I think that there's probably a desire to give the progressives a little bit on transition stuff because it doesn't really matter very much. What really matters is who's going to run the show when it gets serious after January 21st. And the key to watch there is probably the Treasury Secretary. I think Lyle Brainerd is probably the most likely choice. She's again straight out of the Democratic mainstream, a lot of experience, and I think those are kind of the kind of people you're probably going to see. The oldest cliche in Washington is that personnel is policy, but that's true. I mean, a president can only pay attention to a few things at a time, and the rest you turn over to your staff and cabinet agencies. And I think in the end, I could be proven wrong, but I think in the end, the impulse in Biden world is to give the progressive wing of the party just enough to keep them satisfied, but keep the rest of the portfolios within the Democratic mainstream. As I said, I actually think a divided government scenario is helpful to Biden in that sense, that he has reasons to remain with a flag planted in the center of the spectrum because he has to, and that's what he wants to do anyway. So maybe Bernie Sanders will become labor secretary. I have my doubts, but that would be interesting, but it's not the most important of all cabinet agencies, obviously.
Yeah, I personally find it fascinating that there's all this speculation on these senators. Well, every time you move a senator into the cabinet, you just open up the risk of losing another Senate seat.
Right.
So,
which, by the way, is why you can't put Elizabeth Warren at the Treasury Department. Not that Joe Biden would want to anyway, but Charlie Baker's a Republican governor in Massachusetts, and he would fill that seat with a Republican. And every problem the Democrats already have in the Senate would just get worse. So, I think there's going to be an attempt by the new Biden administration to make good on some things he talked about, but he can try to roll back all the Trump tax cuts and can do that in the House, but that's not going to fly. And so there has to be a more artful deal done. There has to be some attempt to find common ground, unless we're all shocked by what happens in these Senate races in Chicago, in Georgia.
So fiscal policy, we all know there are really only two levers in the end on the economy: fiscal policy and monetary policy. And Jay Powell is pretty much out of tricks. And unless we want to go negative interest rates like Europe, which doesn't seem like such a hot idea, he himself has said, we need more stimulus. We need more CARES Act. Katie and Goldman Sachs and Wall Street want more CARES Act. Are we going to see something happen on that, or is that moved on?
Well, look, I think the incoming Biden administration would love to have another bite of the CARES Act apple done in the lame duck session, both because it helps get it is needed for the economy legitimately now. It helps put things on an upward path before he takes office, and it gets one big item off the table before he gets in, so he can start paying attention to other things. So I think you saw today President-elect Biden talking to Schumer and Pelosi, trying to get the wheels moving forward on a stimulus plan of some kind in the lame duck. And by the way, you can come back and have another bite at that apple after the first of the year anyway. This would be the fourth or fifth, I can't even keep track anymore, a stimulus and coronavirus package. There can be another one next year, but I think there's a very high priority in Biden world in seeing if something can happen on this front during the lame duck session, both for the economic benefit and also the political benefit of clearing that off the deck so they can focus on other things.
Katie, beyond COVID-19 specific relief, what would Wall Street like to see in terms of fiscal policy going forward?
Yeah, I mean, I do want to say, I want to build on Jerry's comments that I think we'd like to see some kind of package done in December effectively. And, at Goldman Sachs, we think it's possible because, and Jerry, I'd actually be interested in your perspective on this, but our thinking was that because we have this runoff of the Republican senators, the Republicans aren't going to want to be seen as the people holding back fiscal relief from the Americans, and that might bring everybody to the table. And we think it's possible they could get something in the magnitude of $1 trillion to spend. And then on the Democratic side, they're not so sure they're going to pick up those seats, so they may not have a better majority to work with next year anyway. But what do you think about that, Jerry? And then I'll answer the question, John.
I think that's exactly right. I think Mitch McConnell doesn't want to be seen as the guy who stopped a coronavirus package from getting passed just before 2 Senate seats are up in Georgia. I also think the reverse holds true in the Democratic Party. There is a fair amount of anger among moderates who think that Nancy Pelosi basically held down their success in the election by not finding a way to get a coronavirus relief package across the finish line before the election. It's not a good look for them either, and I don't think they want to repeat it before these elections in Georgia. So if you're figuring out, if you're trying to gauge the factors that make it more or less likely that Congress gets something done on this front in the lame duck session before the end of the year, the Georgia races clearly work in favor of seeing something get done.
So, we do want to see a package done. As you pointed out, John, the economy does need it, and we think it's important. And so hopefully it'll happen in December. If it doesn't, we think it's going to happen early next year. I think the attention's going to switch, and I raised it before, but maybe we can address it here again, to inflation, because we responded to this pandemic already once, basically like a war, when you look at how much of GDP that we spent on stimulus. In fact, actually, the only other country that spent this much on GDP as a percentage of stimulus, in my time on Wall Street, was China in 2008, where they were also facing an existential crisis. And so there's been a huge amount of stimulus. We think there's more stimulus to come. I think some of the inflation expectations you're seeing creep up in the markets are anticipating that stimulus, how much M2 supply is out there. Just like it's been a long time since I took economics at Notre Dame, but I do know that M2 supply has grown 20% effectively year over year. It's the biggest spike we've had in decades. Now, we had a lot of M2 supply growth after.
Katie, help us. What's M2?
Well, you need to get inflation. You need money supply, broad money supply growth, which is M2 supply, but then you need velocity. So you need the money to be spent in the system, I guess, is the simplest way to explain it. After the financial crisis, we had M2 growth, but it didn't get into the system because it stayed on the balance sheet of the Fed. And Jerry, keep me honest here and correct me when I've given a bad interpretation of this. This time around, we've pumped a lot of money, and I actually think it's going to get caught up in the real economy, and then we're going to see I can't tell you if it's going to happen in the first quarter, the second quarter, 2022, but the balance of risks have shifted, in our view, towards inflation. And that's a highly, highly relevant investment concept, because for most people's, since basically 1980, effectively, the last 40 years has been a regime of deflation, with Fed funds going from 20 to a quarter point. Now we're going to have inflation. We actually have a central bank that said that they want to see inflation, that they're not going to let the employment number drive it. Even if unemployment comes down, they're going to let it run further. They want to get it back in the system. And that's what I mean by regime change. I think it's just a very important moment. Again, I can't call when it happens, but the balance of risks have shifted in that direction. And just to end with an actual, investment implication of that makes me nervous about fixed income markets. I think the risks are very asymmetric for bond markets in general. And if you are in the bond markets, you should be further out on the risk spectrum and credit and high yield. There's just not a lot of return going to come from investment grade. I think it makes the case for equities stronger, and we can hopefully come back to it more, but you're going to have to be quite selective about what to own within the equity market. So that's my biggest comment from you on fiscal and how it's going to end.
Yeah, and Jerry, as you contribute your thoughts here as well, just to put a finer point on what Katie was saying, the federal deficit this year 3.1 trillion, which is 3x the second highest year ever, which was last year at 1 trillion. And today our federal debt is almost 100% of GDP, and we're quickly going high on the standings in the wrong way as one of the most levered countries in the world. And it used to be, I think, the Republicans used to care about deficit. And the last time we had a surplus was under Clinton in 92, and no one seems to care anymore. And so we have free money and we're spending it like it's free money. Is a day of reckoning coming, and will we have all of a sudden a reawakening of, wait a second, we can't spend our way to glory forever?
Well, I mean, look, first of all, right now it's all stimulus all the time on both fiscal and monetary policy, but that's in the short term. I can predict as sure as the sun's going to rise in the east tomorrow what will happen. As soon as Republicans are not in the White House, they will start to care about the deficit. You saw Wilbur Ross. I was amused. Wilbur Ross today says, well, I think the next turn is going to be concerned about debt and deficit. Well, I mean, sorry, guys, that's pretty cynical. And I've been one who's been harping and writing about the deficit and the dangers of deficit spending for 35 years in Washington. And, nobody cares right now. I mean, literally nobody in either party really cares. Republicans are about to start to pretend that they care. But that horse is out of the barn for a while. And so I don't know when the day of reckoning comes. But I do know that it's going to, if the inflationary environment Katie's talking about emerges and interest rates start to go up, there's not going to be any money left after paying interest on the accumulated federal debt to do anything in Washington anymore. And that's when it's going to get serious for political figures. When it gets serious for the markets, I don't really know. But I don't think that's for a while yet, because among other things, in the Democratic Party, there is an active argument that this is no time to worry about the deficit. When interest rates are this low, you should be doing deficit spending. It's a good thing, not a bad thing. And for the time being and for the near term, that's kind of where the political climate is.
Jerry, if you've been writing about that for 35 years, keep writing about it, because sooner or later you're going
to doesn't have much effect.
You're along that view. Go ahead, Katie.
No, I was just going to say I agree with a lot of those comments. I mean, while I talked about where we were in 1980 and Fed funds were at 20, we're now at a quarter. The GDP debt to GDP was at 30, now it's at 100, but the interest payments, because interest has calmed down so much, are actually less than they used to be. So to Jerry's point, that reduces the urgency. And the other thing I would say, just to be, I really want to be clear on this, when people ask us, oh, did we do too much? Did we spend too much? The only way to answer that question is to look at the counterfactual. Had we done nothing, we probably would be in a depression. So we did actually need to do something. And so I don't want to suggest that we haven't done the right thing. I think we had to, again, it was a wartime moment. We had to use every tool at our disposal. I just do think people need to be sober that, the balance of risks in our view have shifted, and that has real investment implications.
And I should add, as to be fair to Democrats on this, I agree with Katie that it had to be done. And the only lesson that people in this town at least took away from the 2008, 2009 crisis was if you're going to if you're going to respond to a crisis like that, don't go too small and don't go too slow. Go big and go fast. And that's true and that's correct. And I think it's helped a lot. But there is also, I think, to be fair to Democrats, there's also a feeling among Democrats that deficit spending at a time of low interest rates is a good thing if you're actually making investments, if you're investing in an industrial policy of some kind or an infrastructure program, so that you have something to show for it at the end of the day, besides simply an inflated federal debt figure. That's not happening, but I think that could happen in the Biden administration.
Yeah, one of your colleagues wrote about that today, about Biden. If you're going to, you're probably half the world's going to fault you anyway, so you might as well go big. Related to that, you mentioned the word infrastructure. Do you think that'll be a focus of the spending? There's been a lot of talk about that. Seems like an area where there should be some common ground.
I do, and there was common ground for the last 4 years. It's actually one of the great failures of the Trump administration that they didn't get this done, because that deal was there to be done between Chuck Schumer and Donald Trump in the first year of the term, and then it got all caught up in the immigration debate, and things went sideways, and it never happened. I think there is room for an infrastructure agreement, a bipartisan one, one that has a little bit of clean green energy involved, but not the Green New Deal. I would look for an early emphasis. It's a win-win-win for Joe Biden. I mean, I've talked to him about this personally some. He sees this as not just an economic package. He sees it as a jobs program, and he sees it specifically as a union jobs program. And so, Union Hall Joe is thinking about this as a way to create union jobs, and that's a classic Democratic way to see it, but it's one reason I think it's a fairly high priority for him. And there's plenty of appetite for that on the Republican side as well.
Jerry, I'm going to go 3 quick topics for you, a bit of a speed round. You mentioned immigration. Any prospect for Dreamers, DACA?
Yeah, good prospects for that. Not good prospects for the ever elusive immigration reform plan beyond that.
Healthcare.
Fiddle around the edges. I think Obamacare survives. I think unless the Senate seats in Georgia turn out differently than I expect, the public option is just not going to happen in the Republican-led Senate, and so you have fiddling around the edges of Obamacare.
Income disparity, national minimum wage, job training, skills training.
Probably some bipartisan consensus on job training, maybe a little bit on minimum wage, but not at the $15 level. There's a populist Trumpist strain within the Republican Party right now. Donald Trump says he's in favor of raising the minimum wage. There are some young conservatives who want to think about ways to use government power to help manufacturing industries and towns and workers. So it's not as implausible as it might seem, or it would have seemed a few years ago.
Katie, bit of a speed round for you. What are you advising your clients to do? Realizing when I say your clients, Goldman Sachs, I know your clients are particularly focused on long term. And then comment as well on the traditional 60% equity, 40% bond portfolio. Is that still the winning mix?
Yeah, so let's start there. I mean, the big picture comment there is I think the traditional 60-40 portfolio is very broken for a lot of the reasons we talked about here. So big picture, we think that portfolio is set to return somewhere in the magnitude of 2 to 3% real returns because of going in with extended valuations and this possibility of inflation over the next 10 years. That's annualized. Just to give people a sense who are reading their statements regularly and might feel great about the last 10 years, that return was 8% real annualized, 8 to 9% over the last 10 years. So we're looking at a very, very subdued return environment unless you do something different than the traditional 60-40 portfolio. You need to look for income outside of fixed income markets, probably in equity markets. And then final comment, in equity markets, we didn't get to talk about it too much, but those FANGs companies, they are going to be smaller companies in our view in 10 years than they are today, and they dominate people's portfolios. So they need to look beyond them. And 4 themes we would look at is technology down the market cap beyond the FANGs, the intersection of consumer and technology, following the millennial consumer, the intersection of healthcare and technology, I think probably the most exciting theme in equity markets over the next decade. And then finally, just picking up on some of Jerry's comments, climate. The $60 trillion transition to renewable energy is going to be one of the greatest investment opportunities, I think, of our generation.
And for those that are interested in opportunities outside of the US, where would you point them?
I think it's very important for people to get exposure just actually outside the US as a starting point, because I don't think the hegemony that we've had of US equity markets is going to repeat itself over the next 10 years. So I would point them to international developed and also emerging markets sized appropriately. And just a warning there on emerging markets, you should not be a tourist. You need a strategic allocation. If you look at EM returns over the last 20 years, you guys have probably heard the stat on the US, it's worse than emerging. If you missed the best 40 days, you would have lost 100% of your return. So don't time it, but again, get some international exposure and get some exposure to our emerging markets. And having exposure to China, I think is very important.
When I sent you all some thoughts 2 weeks ago, I thought we'd spend most of this call on tax, and we haven't mentioned the tax word yet. So Jerry, is tax dead, at least for the next 2 years, if not the next 4 years?
Well, again, let's talk after the Georgia runoff elections. But I think there might be some. It depends on how artful Joe Biden and Mitch McConnell are. I could imagine a trade-off in which the top corporate tax rate edges up a little bit from where it is now in return for some other things that Republicans might want. I don't know what those might be. But again, this is not a climate for a giant tax deal. You go back to 1986 and the big tax reform. It happened in an era of divided government and happened because there was divided government. But that was a different time in which I think there was a lot more willingness to do a bipartisan deal and a lot less pain for having made a compromise with the other party. So I just don't see this environment as being one that's conducive for the kind of big tax move that some Democrats talked about in the campaign.
Katie, what would Wall Street like to see from a tax perspective in the interest of the economy, perhaps not their own tax bill at the end of the year? Let's separate that.
Yeah, so we can tackle both. I mean, it is one of the reasons that the market did better on a divided government is that we're not likely to get this corporate tax bill through, and Wall Street wants to see a competitive tax environment. I do think there's some room for compromise, going back to where Jerry talked about places for this. I think they don't want to roll back 100% of what Trump did, but I think there's a room for a little bit if that ends up having to be something we need to negotiate down the road. That would be on the corporate tax front. And then to comment on personal, because we advise a lot of high net worth clients, I would say, the immediate threat of taxes and changing the estate cutoff is off the table. And by immediate, I mean like the next couple of months, the next year and a half, but it's not eliminated completely. Like, we are going to have more senators elected in January and then 2 years. And so the balance of power could shift. And from an individual perspective, I would say our clients continue to be very focused on the fact that we are likely to go into a harsher tax environment, and they're spending a lot of time trying to prepare for that.
Jessica, remind us where we are today in terms of the different tax rates and where things are going to go out of default in 2021. And I think you have a slide or two to share.
Yeah, definitely. If you want to go ahead and pull that slide up, we can just look at exactly where we are, kind of what we know, right? What we know, where we are at 2020, and as things are set right now, where we can look to 2021. So if you want to pull that slide up, I know we've got one. It's supposed to be coming up. Okay, there we go. And so as you can see here, I'm not going to go through each individual item here, but as you can see, most of these items, there's very little change from 20 to 2021. Most of those things are just kind of inflationary adjustments, the normal things that you would see as we look ahead. Now, one of these actually that I do want to point out at the bottom that is sort of more specific to the realm that I work in here in the university is the CARES Act. And this was legislation that was passed earlier this year. And specifically, there's a provision that really kind of changed a little bit of the landscape for charitable giving. As you can see there, the income limitation for cash charitable contributions increased from 60% of AGI to 100% of AGI. And, so we've really been receiving a lot of questions.
What's AGI?
Oh, adjusted gross income. Sorry about that. So yeah, adjusted gross income. But so yeah, sorry, that's my tax hat. I tend to just kind of roll with it. But yeah, so it really produces a unique opportunity for individuals to potentially offset their entire federal tax bill just through cash charitable contributions and charitable giving in this year. So, I think that there's some really unique planning opportunities there that you can look at. So, that's kind of one specific item that we actually do see shifting from 20 to 21, whereas a lot of the things, again, we don't expect large changes. Now, if you want to pull up the next slide and talk a little bit about, again, we can kind of look at where things could have gone or could potentially go. So as you've heard from both Jerry and Katie, with a split Congress, I don't know exactly how much is going to get done, but I don't think that the Biden administration has made it any secret that, they would love to see higher tax rates, especially at those higher income levels, and the corporate tax rate as well. I think it's, I'd like to mention here that, the Trump tax cuts, the majority of the tax cuts and the incentives there are actually set to sunset at the end of 2025. And so I think that's really important to keep in mind because, regardless of what does or doesn't happen between now and then, between those cuts already being kind of set to sunset in 2025 and then the Biden administration's stance on increased taxes and some of the things surrounding estate planning, I think directionally we see where things probably are kind of starting to head. Kind of to Katie's point, I think those two things are really big factors in kind of looking towards the future and seeing some changes with the tax rates and the estate tax exemption kind of forthcoming. And specific to the estate tax exemption, actually, we've got another slide to kind of talk about that because I think it's really important. That's where we're actually spending a lot of our time right now. As you can see here, as a result of those 2017 cuts, and the exemption level was almost doubled for estate tax planning, and it's set to revert again at 2025, at the end of 2025. Most estate planners right now are kind of already taking that into consideration and looking towards the future at that. But I think that this graph really shows how unique of a time and a unique kind of a special time it is to have the exemption that high. We may never see anything like that again. So, I think that to kind of put it into perspective, in 2017, I believe 5,500 taxable estate returns were filed, whereas in 2019, there were less than 2,000. So I feel like, as that exemption level, as we look out into the future, I think that a lot of people could be impacted as we kind of go along and kind of move in that direction. So with that current exemption rate, and with interest rates really low right now, and with potential valuations being low, we're seeing a lot of activity in kind of the estate planning realm. We're seeing a lot of questions and a lot of planning opportunities that are coming up with our Notre Dame family, where people are asking about what they can do kind of for multi-generational planning, how to get their families involved with philanthropic opportunities and things of that nature. So I mean, I think that that's kind of where we're looking and where we're headed. Nobody has a crystal ball. We don't know what's going to happen in the future, but that's kind of the direction it looks like things are headed in.
Yes, and as great as Jessica is, she's not a one-person team, thankfully. We have really fortunate to have a wonderful team on campus, and who better to trust with some of these discussions? And as Katie is saying, it's not just a here and now thing, and we all know planning is a long-term process, and I know firsthand that lots of folks are really starting to think about it for the first time, what this could all mean, not just in the next year or two, but over the next decades. Because if you look at what we were saying just around the federal debt, it's pretty clear that something's going to have to change, because we can't live on this low interest rate fume and fuel forever, and that's likely to be higher taxes at some point to pay for all this fiscal spending. So Jessica and her team are always available, and just a wonderful resource for all of us. If you turn to the next page, I really want to take the opportunity to thank our two sponsors, the Kavanaugh Council, as well as the Batting Guild of the Notre Dame, but also our President's Circle. And sometimes you might wonder, well, how does this all come together? So I thought this page was helpful. Really, all of you, and because of you, allow the university to meet not just the needs of today, many of which are unanticipated, who knew what we were facing in terms of COVID-19, and making sure that every student could return to campus and that whatever financial distress they were suffering wasn't going to get in the way of their opportunity to come to Notre Dame this year. And so many of you stepped up in many different ways. And then we don't know what tomorrow brings. And we know that for Notre Dame to continue to be the great university it is, it has to have not just short-term financial strength, which we're blessed to have today, but longer-term financial strength. And that's really because of you and your annual giving, but also so many of you who have included Notre Dame in your estate planning and long-term giving. And just a couple stats. This year alone, over 4,000 undergrads are receiving financial aid from the university. A wonderful stat. We have a ways to go on that, but a good place to be today. And in 2020, 23.3 million of unrestricted giving through the President's Council and the President's Circle, allowing Father John to really meet, as I say, the unanticipated needs, particularly important in a year like 2020. We also have 350 new Baden Guild members over the last 18 months and planned gift commitments of over 350 million. And so you're our barbell, which allows Notre Dame to be strength, helping in the short term and helping in the long term. And for that, we are all very fortunate. And I thought the next page really grabbed me because we talked at the advisory councils last year in the group session about Florence Daly. And just a quick reminder, Florence was someone who worked in Rochester, New York, was a secretary who happened to get some stock options in Kodak long before their recent stock option program, which we won't get into. But and she made a $9.6 million gift in 1966, 54 years ago. She really had very limited interaction with the university. And over those 54 years, that 9.6 has turned into 105 million. And I just think it's an astounding figure. Over 11,000 students have benefited from that gift that she made 54 years ago. And this year alone, $5.7 million in gifts awarded. So when you think about making a statement about what's important to you, the legacy you want to leave, and the power of that, and Van Abbott is one of those 11,000. We're not quite sure if he got us to 11,000 or 11,001, but he's a junior from Petersburg, Alaska. He worked as a commercial fisherman through high school and thought with his commercial fisherman savings, he could go to college, and then realized that he wasn't even close. And if it were not for Florence Daly, no hyperbole, he would not be at Notre Dame today. And I just think that Florence Daly up there somewhere looking down on all of us must be really happy and proud to see Van Abbott and 11,000 other students being able to attend the university that she loved so much. So I too, and I think as Katie said earlier, of people of faith and good Americans, I think we all choose and do choose optimism over experience. And I'll let Jerry have the last word since he's the only professional on this, but I just really want to thank everyone on behalf of Notre Dame, and God bless you all. God bless America, and stay safe and happy Thanksgiving. Jerry, you get the last word.
Well, look, I mean, I as I said before, and I'll just say it again, you know, this is it feels like an odd time to say that you're an optimist because it seems so angry and raw, at least from where I sit in Washington. But, you know, you have to be optimistic about the country. Katie made the point that 150 million people showed up to vote. There were people dancing in the streets over the outcome. You know, it's a time to be hopeful. And, you know, my son, Joseph, the Notre Dame graduate, and his wife, Amy, a Notre Dame graduate, they're a two-domer couple, are having a baby in February. So I'm going to say that proves 2021 will be better than 2020. So that's my final word.
Thank you, Jerry. Thank you so much, Jerry. Thank you, Katie. Thank you, Jessica.
Thanks.
Go Irish.
Bye-bye.